John, thank you very much for taking the time out to speak with us today.
Thank you.
So you were doing a panel session earlier this afternoon. Perhaps you can tell us a bit more about some of the findings that came from it.
Okay, the panel was on multi-asset class trading and developing cost synergies. So the key things are really around, as we move into or through a period of economic recession, what impact does that have on the trading desk? And what we've really seen is that costs are being cut across the board. So typically firms have tried to reduce their expenditure on systems and on people. And so one of the ways to do that is of course to cut businesses, to reduce things. But another way to do it is to try to achieve more with less. And so part of the driving force between multi-asset class trading is to effectively say to people, well, no longer can you just trade equities, but you also need to be able to trade futures and options or other types of derivatives. Or an FX trader might be told, well, you also need to be able to trade derivatives of some types. It's not something that has a dictionary definition. It really just depends on a particular company and how they operate. But what I've seen with a number of firms has been that people have tended to proliferate sideways within their core asset class area. So an equity trader will start to trade equity derivatives. A fixed income trader will start to trade fixed income derivatives. And really it's a case, I would call it almost of ink blots. If you think of ink blots on a piece of paper, gradually they start to meet. So what we've had has been islands of asset classes. So equities in one corner, derivatives in another, fixed income in another, foreign exchange in another, credit derivatives in another, structured credit in another. And gradually these ink blots are starting to merge, not equally and not all into the same firms. Some firms very much maintain a specialist model where they require people to just trade one asset class and to be an absolute specialist. Other firms have a more generalist model. The thing that's the consideration is, does the trader then become a jack of all trades or a master of none? And that's where different firms find different answers and different solutions to this problem.
Do we think then it seems to me like it sounds like one of those things that, whilst it sounds almost like it's going to be the case, that ultimately no one really wants that. You'll always have a need for some level of specialism in certain areas. And what we'll maybe see is specialists that have arms that branch out, or do we think we'll see a complete globalization of markets to the point where everyone's an expert, well not necessarily an expert, but is aware of all the different asset classes across all the different markets, and it's now just one global marketplace?
I don't think we'll have that because of the complexity of doing that. What you tend to find is that even within investment management firms that are global in their footprint, they actually tend to have local offices. If truly one group of people could be global investment management experts, then for cost reasons it would make sense for them all to be located in one place. But that's not typically what you see. What we typically see is for global asset management firms, they'll have an office in Europe, they'll have an office in the United States, they might have one in Asia Pacific, possibly one in the Middle East. So we don't really have that kind of all things to all men at all times in one place. We tend to have geographic specialization, and then within that there'll be asset class specializations that allow for that firm to make its product offering to its client base. It's not a simple case of a person in Mumbai needs to be able to trade American equities and American mortgage-backed securities as well as European fixed income and Japanese equities. It tends to be that people specialise within a time zone and also within an asset class, and what we're seeing is that those ink spots are starting to merge. You've also got the way that market structure is changing. So what we've been seeing over the last few years, in part following on from the work of the Cassiopeia Committee, which effectively was started within France by Christine Lagarde in her former role as French finance minister. She's now at the IMF. But to try to move fixed income instruments to trade to something that looked more like an equity exchange, where there's a central limit order book, price discovery, and depth of market. Now, whether that's going to happen or not is an open subject. Nobody really knows the answer to it. There's lots of firms that have got an offering in that space. The London Stock Exchange Group with their MTS division have a product in there. The New York Stock Exchange, NYSE Euronext, have a product offering there. The trading systems provider Trading Screen have a product, Galaxy. There's an independent firm called Vega Chai, which is founded by a number of ex-Goldman's people. You may have seen it recently that BlackRock, the large American asset manager, have put together the Aladdin bond trading platform. So that there's interest in there to move for fixed income instruments to move to something like an equity trading exchange. But whether it actually happens or not is unknown. There's a whole regulatory issue around regulations changing the market structure, but whether that's actually going to happen in the way that people envisage, we don't know. There's also the technical issues around buy-sides moving from an RFQ-based or telephone-based trading model to trading fixed income instruments on an exchange. Again, nobody really knows how that's going to happen. Finally, there's also just the desire for firms to trade that way. I think we can surmise, somebody's having a good time. I think we can surmise, it's almost, you can lead a horse to water, but you can't make it drink. You can provide new market structures, but will people use them? That's the unknown in this subject, really.
Well, thank you very much for taking the time. I think maybe you can go join the festivities. Just one last thing before you go. Obviously, you are independent, you are a consultant. By all means, let people know how they can get in touch if they want to find out more from you.
If you want to get in touch with me, you can find me on LinkedIn or just Google me.
Fantastic. Thank you very much.
Thank you.